Now that we've discussed the three different types of structure, what they mean, and how we can understand what's happening within swing structure, the best thing we can do now is just hop on the charts, take a look at a few examples to better understand the interactions between the three different types of structure and what it means when we're looking at an overall trend. And what I'll do is I'm just going to pick this section of Euro US dollar, and we're just going to dig into this uptrend. So as we can see from this bit of structure, we've just seen a daily change of character. So we were making lower lows and lower highs. We've broken daily swing structure and we're starting to create an uptrend. And on the 4 hour, we started to see our change of character a little bit lower. And we'll just start in this section as we are just about to break this daily swing point to switch the trend from bearish to bullish. So as we can see, if we just zoom in, we have our impulsive leg on the 4 hour here. We have a swing low and a swing high. Price corrects to the downside and then moves to the upside, breaking structure. In this case, what we can see here on the 4 hour is we just have substructure and then price breaks the high. And even then, the substructure doesn't create any sort of real true structure that we can look at on a 4 hour chart. But on a lower time frame, we'd be able to use the structure to make informed trading decisions. And this is where multi-time frame analysis, this is where multi-time frame charting is going to really come in handy and become incredibly powerful. So we just continue on. What we can see is we've now created this new swing point on the 4 hour chart. And as we can see, price is creating structure. We see a low being formed, what seems to be a lower high. Price then matches the low, breaks the high. So in theory, this would be a change of character, although we didn't actually break a low and then break a high. We more or less created a low, created a higher low, broke the high, and then we're starting to continue up. So it's a little bit different take on a change of character, but as we know, the markets are not perfect and we can only work with the data that we are given. But what we can see very clearly is that price creates a higher high within the range. So we've created up until this point substructure, and then we start creating minor structure once we break this high, create a higher high, higher low, and then we go running the previous swing high to form a new high. And what we can see is price creates a high initially, we start to create substructure, we move to the upside once again, but we don't actually break and close above the 4 hour high. Price then creates another bit of substructure, which breaks below this bit of substructure and then continues to move to the upside, breaking once again the swing high. And this is where we see that true daily point being broken. The trend is now switched from bearish to bullish on a daily chart. And as we can see, we are in a very strong 4 hour bull trend as price continues. And if we'll just continue on, what we can see is we now have this impulsive leg or this swing structure on the 4 hour. And what we can see is a little bit more clearly, we're creating substructure. We get a change of character. Price comes down and then continues to the upside. And if we just look at this a little bit more granularly, again, when we're just talking about market structure, all of the concepts apply regardless if you're looking at swing structure, substructure, and minor structure, that when we're looking at the overall range of the swing structure, as long as this low isn't violated, we're still in an uptrend. And once this high is broken, we're expecting a new higher high to print. So anything that happens within here is just contained within this range of swing structure. And the same can be said for our substructure. So as we can see, we come down, we come up, we create a lower high, we create a lower low. So when we're looking at this range in price, as long as this high isn't violated, we're still in substructure and we're still in that downtrend contained within the swing structure. And then as we can see, we break to the upside, we create a new higher high, we've seen a change of character. So what we can then do is look at this range in price, because now we have our low and our high. So we're now starting to see higher highs and potentially higher lows. We haven't actually formed any sort of higher low yet. You can see price does come down. It does break lower than this, but the key thing here is that price doesn't actually close below that swing point. And even if it did, it's not a big issue. But as we can see, we then run to the upside, creating a new high. If this price did start doing something like this, again, we would just have substructure, minor structure, substructure, and then minor structure if we continue to break to the upside. We won't know that's going to happen until it happens. And at that point, we just have to adjust our analysis, flow with the market and don't force your will on it. Just because it did a change of character here doesn't mean that it can't break down to create more substructure, because as we know, price is contained within this range, and for it to remain bullish, it can still come down as low as here before coming to the upside. And as we can see, we do have a valid demand zone at the bottom of this entire range. So this would be a valid point to look for a potential buy as well if price did come down that way. We'll move on and just look at this bit of price. So what we can see is price moves impulsively to the upside from this swing low to this swing high. And as we can see, we create, again, substructure. And as we can see in this case, we don't actually get minor structure in its true form. We can see that we just get more or less equal highs. We're creating more of a range in price, and then price moves to the upside, breaks the previous swing high, and forms a new higher high. Now, of course, if we looked on a lower time frame, this would more than likely be some sort of change of character, and we'd be able to derive the understanding that we've switched from substructure to minor structure and then continued to break the overall swing structure that we see on the chart. So when we look at this next bit of price action, there's a little bit of multi-time frame analysis to factor in to be able to better understand how structure is played. Because if we're just looking at this bit of structure here, we know that our lows would be here, our new high is here, because price created a range just like that, price pulled back and then continued creating a higher high. But as you can see, I don't have a low mapped out here or a higher low mapped out here. It's maintained here, and this is still part of the bullish leg. Now, if you were looking at the 4 hour in isolation, yes, it does break structure and we start to create what looks to be a bearish trend, and then we do get a change of character. But because this exists and we're still bullish on the daily chart, this is what we would refer to as a variance in market structure. And what I mean by a variance is that we're starting to see the 4 hour creating lower lows and lower highs, while the daily is still creating higher highs and higher lows. So if I just pull this back, we're going to go to the daily chart and just look at this bit of price action in a little bit more detail. And what we'll do is we'll look at this point here and this point here on a daily chart. So what we can see when we map that out is when we're looking at this in general daily market structure, what we can see is this is just one large impulsive leg. And when we're looking at market structure, we know that the larger the impulsive leg, the more room that price has to move to the downside. And we know on a 4 hour chart, if price is to correct, we're going to see lower lows and lower highs, more than likely forming on the lower time frame as that daily chart pulls back. So what we can see is on the 4 hour chart, this little section right here, we'll go back up to the daily chart. We can see that it is a minor pullback on the daily chart, although in my personal opinion is not so much a bit of structure, but a small pause in the market. It's a consolidation. And what we can see very clearly is price does break that. So we do get a 4 hour change of character. So if we go back to the 4 hour, once again, we've broken the low. Like I said, we're starting to create lower lows and lower highs. But because we're trading within the larger daily impulsive range, we can look at that and start to identify it in a slightly different manner. Again, we'll touch on this more in the liquidity section, but as we can see, we have this collection of equal lows, which implies that there are multiple orders that rest below this structural point. Price is more than likely going to tap into that range. And what we can see is also we have more equal lows here, followed by a daily demand zone. So what we would expect is that price would more than likely tap into this spot before it runs to create a new higher high on the daily swing structure. And as we can see, if we just eliminate this set of lows as a primary swing point, we can see that price creates lower lows and lower highs, and then changes character, breaking the high, and starts to create minor structure before we actually take out the swing structural high. Now, of course, from a 4 hour perspective, we can absolutely use this as a structural point and then start to say that we're now creating lower lows and lower highs. We're breaking structure to the downside. There's absolutely nothing wrong with that. So in that case, if we're looking at it here, we would have some substructure. We have minor structure being created within this candle. Again, it would be seen more on a lower time frame. We get this sort of price action that creates the lowest low. We break to the high and we start creating a large impulsive leg. So on the 4 hour, yes, we can consider this the start of a bear trend. But then when we factor in liquidity concepts, again, we'll touch on that in the next set of videos, and the fact that the daily is in a larger swing structure, We can disregard this point as a true 4-hour low, use it at this point, and looking at it from a 4-hour structure and looking at this as the substructure, creating minor structure, and then moving to the upside. But again, this is combining a few extra bits that might not necessarily seem overly clear yet, but it will be very clear very soon. So what we'll do is we'll just move on just a little bit more. Go back to where we were. Okay, perfect. And what we can see is we now create a high. And again, similar to what happened back here where we created a high, we started to create some substructure, created a new lower low. We move back to the high, we wick it, and then we continue back to the downside, creating lower lows and lower highs. And what we can see here is we get a change of character. We've now started to create minor structure before we take out the previous swing structural high. This also coincides with a daily level as well as a 4-hour level. So it's a very key bit of structure that is happening here. And one thing I also want to just touch on very quickly is how I would be mapping out a break of structure just so that it gets cleared up as quickly as possible. So say we are in a uptrend and we create a high just like this. This would be the high that we're looking to break. I would only consider this structural broken if we break and close above the previous high. So in this case, let me just take all of this stuff. So if I see future price action breaking and closing above this previous high, I would count that as a break of structure. Now, on the flip side, if price just does something like this, to me, that's not a break of structure. That is a liquidity grab. Again, we'll touch on that in future videos, but I just wanted to clear this up as we continue because in this case, this is a perfect example of a high being created, a liquidity grab of that high because we don't break and close above. So we're just still creating that overall swing structure. We start to create substructure, as I said, create a low, break that low, and then we start to create minor structure. And price continues moving to the upside. So again, breaks of structures are only valid when you're looking at breaks and closes above or below a structural high or low. A wick of those levels indicates more of a liquidity grab, but not a break of structure. And if we get the instance where a high is created, so in this case, we can see this. If we are mapping this out in real time, initially we would look at this as our swing high. We'd be waiting for this to break, so we'd be anticipating some sort of higher low to form. What ends up happening, we get a pullback, creating some substructure. We take another run at the highs, we wick it, but we don't actually break it. We pull back down again, we break that low, we've created a new high. So again, we're just waiting to see if this high gets broken. We wick it once again, and then we start to get a more substantiated pullback. And sometimes this can be the clues that a larger pullback is going to happen. If price struggles to break a high, but it's just wicking it ever so slightly, the indication is that we're starting to get people to look for sells. A lot of people are looking to sell, and a lot of orders are changing hands. Again, I'm starting to get a little bit too much into liquidity, so I'm going to curb that discussion, but just to give you a little bit more information there. But again, when we're looking at the overall swing structure, we're just looking for valid places to look for trades or to look for a reaction. So we know that because price is in an uptrend, we're creating higher highs and higher lows. We have our swing low and our swing high of our swing structure. We know that any price action that forms within this range of price is our substructure. And then once we start going pro trend, it's our minor structure. I also mentioned that we would be looking for a point of demand or a grab of liquidity to constitute a formation of a higher low. As we can see, we have range created demand right here, as well as wicks. So a couple different options to look for demand zones within this point in price. And what we can see is price also creates a low. We sweep that liquidity, we create our change of character, and then we continue to the upside. So if we were looking for entries, this would be a great spot. And now what I'm going to do is I'm just going to quickly jump down to the 15-minute. We'll review all of this bit of structure. I don't want to make this video too long, but I also want to show a couple different flavors of this in action because some of these 4-hour points don't have minor structure, they only have substructure. Some don't have clear substructure or minor structure, and we're just seeing breaks, and others have good examples. I also explained the concept of the variance between higher time frame structure as we had right here. We were able to filter that out a little bit. We'll probably see some examples of that on the 15-minute as well. So what I'm going to do, just so we don't jump too far ahead, we're going to do bar replay to that point, and we'll go to 15-minute, and we'll just backtrack Again, we'll start in the same spot we did on the 4-hour chart, just to showcase this a little bit further. Okay, so what we have here, again, is, we'll just start from this point. We have created a new swing leg and structure. We have a swing low here and a swing high here. We've just switched to bullish from bearish on the 4-hour. We're still bearish on the daily, so we're just waiting to see what happens, but we're looking at structure. We're trying to understand what's happening here. And this is the reason we're able to use these 3 different types of structure. We're using it to understand what's happening on the charts. So we can see is once we create this high, we start creating substructure. We're creating lower lows and lower highs. We do get a very minor change of character, as we can see that price just barely breaks structure here. I can't draw a straight line today, but get the idea. I'll zoom in just a little bit more as well. And one of the biggest things about market structure, whether it's swing structure, whether it's minor structure, whether it's substructure, is how do we break structure and what happens next after we break structure. If we see that price break structure but immediately retraces or reverses or is just wicking, chances are that's not a substantiated break of structure, because if I draw an actual line on this from this high to this high, we can see that we have broken and closed above. And what happened next? We immediately broke back down, closed below, and then we started to run back to the downside. So yes, this is the creation of new minor structure, but this is not very valid minor structure. And if we just look to the left, we can see that we do have some sort of supply zone. Prices tapped into it numerous times, and then we started to fall. And what we can also see is we've now created a range in price, which could be used as a potential supply zone or reaction point in the future. And as we can see, price is now continuing to make lower lows and lower highs. We create a range, but we still are contained within that substructure. We come down much lower. We create a new lower low. And then once we see this bit, we get a true change of character. We've created a new high, and we'd be looking from this swing low to this swing high of our minor structure. So as long as everything's trading within this bit of price action, it's still minor structure. But as we can see, even within the minor structure, we're seeing substructure within it to get a better understanding of what's happening. And what we can see is within this minor structure, we're creating lower lows and lower highs until we get to this point where we break to the upside, creating a new higher high within this substructure, which is within this minor range, which is within this larger swing structure here on the 15-minute chart. And this is where it gets a little bit market structure inception, because like I said, we have swing structure. We're between this swing range. We've now created minor structure. We're operating between this minor structure range, and we're now creating substructure within that minor range until we actually move to the upside. But as we can see, if we just continue moving on, we break to the upside. We now have formed a new high just right here. So we're now contained within this bit of price action. This is a break of minor structure right here. This is a minor structural high, a new minor structural high. And then what we can see within the minor structure is that we are creating lower lows and lower highs. We break substructure, creating minor structure within. This is getting a little bit confusing, I know, but as we can see, then price is moving back to the downside. We didn't break and close below. We're still within. And then price runs breaking minor structure and then eventually breaks that swing structure. If I lost you a little bit on that, I apologize. But what this showcases very eloquently, at least I think, is that structure exists, the 3 different types of structure, but price is incredibly fractal, and I think this is a really great example of how fractal price is. We had swing structure, we started to create substructure, then we created minor structure. We were contained within the minor structure here, creating substructure within the minor structure. We created new minor structure. We created more substructure within that minor structure, and then we started to see the break. And we were able to understand what was happening between all of this range because we understand the 3 different types of structure and what it means. But the big thing as well that we just add on top of all of that is not only is this just happening on the 15-minute chart, we're also seeing the 4-hour chart creating higher highs and higher lows. So we know that our expectation is that price is to move to the upside. Of course, we also know in this example, we have a daily barrier right here being daily structure. And if price wants to remain bearish, we just simply don't have to violate that high. But even then, if we're looking at this point, we're within a supply zone. Price is just pushing forward. So we're looking at structure within a supply zone, a 4-hour/daily supply zone. We're looking at the market structure. If we're looking for a potential sell in this area, we would be looking for price to switch or have a change of character from bullish to bearish, and in this case, if we're just looking at the order flow, we're looking at the market structure, we have not seen any indication of a change in character from bullish to bearish. And then what this is giving us an indication based on 4-hour structure and then looking at the price action within the 15-minute is that we're still continuing bullish, although we are in a higher time frame supply zone. So, and what we expect when price taps into a supply zone is that we would be looking for sells, but this is how we're able to identify when things are changing. We already had that indication down here when the 4-hour started to change character. But of course, we know with multi-time frame analysis is if the daily is on a bear trend and is starting to pull back to form a lower high, the 4-hour can more than likely put in higher highs and higher lows before we see that new lower low being formed on the daily chart. We're looking for some sort of catalyst between daily structure in this case to form a lower high. And in this case, we have a supply zone at the extreme of this swing structure. We're looking at price action within that. And we're starting to see that although the 4-hour is still bullish, when we tap into that supply zone, we would be expecting to see some sort of clear reaction and switch from bullish to bearish on the lower time frames and have that translate, see a change of character on the 4-hour to continue to the downside, but we don't. And what ends up happening, we run that daily swing point and we start to create a bull trend and continue moving to the upside. So it took a little bit longer to explain that, but I think that was a really great example. And then we can just move on. We can see that we created a swing low here on the 15-minute chart. Then we move to the upside, and similar to this bit on the 4-hour chart is we created an initial high and then we started to create substructure within it. What we can see is we did create minor structure here, but what ends up happening is price fails to really actually break this high. So as it stands right now, once we've created this minor structure, price is trading within this range and we're just waiting for something to happen. We know we're trading in a larger 4-hour and 15-minute range of structure, and we're just waiting for minor structure to really take over. We have potentially catalysts to continue price at a higher low. We have a demand zone right here. We also have some potential structural liquidity that we could look to run. Again, we'll discuss that in the future section. And then what we can see is price breaks to the downside. We create a new lower low. And if we just look at this, we have our change of character, or specifically a change of character here as well. And what we can see is price then creates more minor structure, runs the high, but again, doesn't break and close above this high. So what that ends up doing is it marks our high as this point. So we're still operating on a 15-minute between this low and this high, and we're just waiting to see if price continues moving to the downside to take the low, or if we continue to move to the upside and take the high. So what we can see is once we create this high, we start to create really choppy price action, but we're creating lower lows and lower highs. Again, if we just look at this bit of structure, we can see that we break and close just barely above, but what ends up happening next, we immediately retrace and close below. So although this did form minor structure, it's not very strong minor structure, and what we can see is we then continue creating more substructure, creating lower lows and lower highs. It's not only until we get to this point here on the 15-minute chart that we see a true change of character, although if we were to look at price action, see it on a 1 minute in this particular area, more than likely we're going to see a change of character because we know price is fractal. But we're also using the 15-minute as clues, and then as we can see, price runs, creating a new higher high. And then we can look at this bit of price action as well. So now we have our swing low here, and initially we would probably view this as our high. We can see that price creates substructure, and we can see even on a lower time frame this would be considered a change of character, but if we're just looking at this more from a 15-minute lens, which we are, you can see that price comes down, comes back up, comes down. We're really trading within this range right now. If I can draw a little bit straighter, that would be great. And what we can see is we eventually break, we create minor structure, and we continue moving to the upside. So in essence, what's happened is we've created a 15-minute swing point, but this is where a variance can come into place. We'll just move that bit of price action. If we go back to the 4-hour chart, what we can see very clearly on the 4-hour chart, and this is a really great tip in terms of understanding if a pullback is a true pullback or if it's not, especially when really in relation to multi-time frame market structure. So as we can see here on the 4-hour, we did get this small dip in price and then a move to the upside. On the 4-hour, we did not consider that a structure because it's not a substantiated pullback. When we see an impulsive leg, we want to see an actual true pullback, not a pause in the markets. We want to see something substantial, and we don't get that here. And then what we can see is we do get a more true pullback, and if I just play price forward, we can see Price continues to move to the downside. If we go back to the 15-minute chart, what we can see is where I drew that line was the high that we were looking at. And again, there's nothing wrong with viewing that as a 15-minute high, because as we would see, we broke the high. We're looking at this as our previous swing low, but then we create this high, we break that. So we now have this as our low. But again, on the 4 hour, we're still in an overall bullish trend. We have not created a swing point here. So the impulsive 4 hour range that we're building is to this point. But on the 15-minute, we're seeing a variance. We're starting to see price pulling back once again. We're starting to switch. We're seeing a change of character. So what we can see is we break. So as we can see, we break the high, we're creating a higher high, and then we start to break down. We create a lower low, lower high, lower low. And then we'll just keep looking at this. Let's get rid of these squiggles real quick. So what we can see is we're caught between this range. We break to the downside. So we're now looking at something to this tune. And we continue breaking down, and then what we can see here is we get a change of character. We're breaking down, break the highs, we start to switch, creating minor structure, minor structure, minor structure. And what we can see is we're starting to see pullbacks. We break the high, but what do? We barely break, and then we immediately retrace. We end up creating a lower low. So what we know is this pullback was not true. And what we can actually see is when we're looking at our structure, this was the high that we would use. We can see as this low just gets run, but it doesn't break and close below. Not that it's a big deal, because as we can see, we break the high. We're still making more minor structure because, again, we're still caught in the overall larger swing range. And what we can see is price then creates this point. If we just look to the left as well, and this is where supply and demand comes in, and understanding substructure and the relationship between that and minor structure within all of these swing ranges, because what's happening in this swing range is a battle of supply and demand, quite simply. We have an established trend that we can see. We're creating higher highs and higher lows on the 4 hour and now on the daily chart as well. And what we're seeing between each of these legs of swing structure on the lower time frame is a battle of supply and demand. We have a supply zone right here. You can see an aggressive push away. We can see other supply zones here. They're getting respected. And then what we can see here is once we hit this point, we fail this supply zone. So we're starting to create a new variance within the overall structure that we're seeing. We're starting to see demand taking over, but then we see this supply zone getting respected and price continuing to the downside a little bit more. But again, all that I'm trying to convey here is that this little bit of structure right here was the variance between the 4 hour and the 15 minute. And what we were able to do, and what we are able to do, is understand that this on the 15-minute breaking structure and starting to create a downtrend does not mean that price action is going to continue bearish, because we're able to look at multi-time frame market structure and see what does that actually mean on a 4 hour chart. It gives us a better understanding that this is more than likely a pullback. And then if I just play price forward, what we can see is we end up running the previous swing high and continuing our series of higher highs and higher lows. Now, if we had used this point as 4 hour structure, then we would be looking at it in a slightly different lens, because we'd likely use something like that as a low, and we'd get really confused in this spot, because as we can see, this is just a minor pause in the markets, as this is the full impulsive range that we see. We see an actual substantiated pullback, change of character, minor structure, because what's happening here, this is all substructure, right like that. Again, we create minor structure. We come to the downside, we don't actually break and close below, so we're still maintaining minor structure, and then we come to the upside and create a new swing structural higher high. So I hope this example showcases the importance of understanding the 3 different types of structure, how we can use them from a multi-time frame perspective, how we incorporate supply and demand, because it's so important to understand when we're creating swing structure where we'd be looking for potential pullbacks to complete. So if in a bull trend, for example, we're creating higher highs and higher lows, when that higher low is going to form, we would pair that with the formation of substructure. So for example, if we're in a uptrend, creating higher highs and higher lows, we're expecting a higher low to form. We'd be using demand zones as potential points of information of where a higher low would likely form before we start to continue moving back to the upside to break the previous high, forming a new higher high. And the importance of what the substructure and minor structure actually represents, and it allows us to have a better understanding of the order flow that is present on the charts. And I feel like this example right here was a really great example as well of when you have a supply zone on a higher time frame, so the 4-hour and the daily, and you're seeing price action tapping into it, you're trying to build a short trade idea, and you're using the concept of substructure and minor structure to understand that this supply zone was not going to hold and that we are shifting from bearish daily structure to bullish daily structure. And we had the indication right here that the 4-hour was starting to switch. But again, we know that on a multi-time frame perspective, that if this is the daily trend, we're putting in lower lows and lower highs. This on a 4-hour can be something like this, a bull trend, crudely drawn, where we're creating higher highs and higher lows before we get a change of character that then forms lower lows and lower highs. But we're looking for that catalyst to switch from creating those higher highs and higher lows on a lower time frame to go back in line with the higher time frame to complete that. But if something changes and we have that point, but we don't see that happening, and we're starting to understand the lower time frame order flow, the lower time frame market structure using substructure and minor structure in conjunction with the multi-time frame picture, it allows us to be in line with the market and understanding what is more than likely going to happen for future market structure. It's such a powerful concept. Definitely take time to fully understand this, apply this to your charts, dig into all of the structural points, the swing structure from the daily, the 4-hour, start building the 15-minute within it, and just making sense of everything. If you have a 4-hour price range, look at the 15-minute, see the substructure that's created, wait till the minor structure starts to play out, you get that change of character, then you can start to understand when the trend is now taking back over. And it gives you so much more clarity on how to approach market structure and the things to be looking for as price is printing on the charts.